Good afternoon, everybody. Mark here at TapeTally.com for your Week 23 recap. This week we saw the U.S. markets move up about 4%. Canadian markets move up just under 3%. Volatility got crushed at about 19%. Um, Oil moved up 1%, and gold continued to move down just under 2%. This week I'm maintaining my stance on the markets as usual. For the last 3 or 4 weeks I introduced this column right here, and we've basically maintained this rating for the last 3 or 4 weeks. And if we jump right into it, you kind of understand why I'm maintaining this. We're still stuck in this range. I know I've said this for the last 3 or 4 weeks, but nothing really has changed. All that really has changed is that volatility has slightly increased here, with this down move in the correction. But overall, since 2009, we're stuck in this large channeled bull market. I wouldn't say, that we're in a bear market. I would probably lean towards we're still in a bull market, but it is quite volatile. There was quite a nice reversal here, as you can see, to finish the week, but not much has been done basically in the last month. Like if we switch to the daily chart, take a look at this, and we look at since May the 16th, so it's almost a month. What have we done? Basically, we've done nothing. We had this. We had this strong down move, bounce back, another strong down move, and a strong bounce back. So we really haven't done too much damage, and neither have we done too much good for the market. So that's basically why I'm maintaining my neutral rating. And if we go through the indices, you'll see that that's basically true for all the major markets here. Gold, we can see, broke its long-term trend line, and it's probably consolidating before a move downwards here. Oil markets, we can talk a little bit more about support and resistance, which we will talk about. Volatility is a tough thing to see on the weekly time frame, and the Canadian markets, with oil and gold being in bearish moves, is also suffering because this index is quite heavily weighted towards natural resources. So one thing that I wanted to talk about today is support and resistance. So basically, if anybody understands what stock price is based on, it's determined by the ability of a company to make money in the future. The price of the stock will change as the market learns of changes in the company's fundamentals. So basically how I trade is that I trade off of the price of the stock, because that builds in the fundamentals of a stock. They are important, but even more important is the perception of those fundamentals. So the investor psychology influences how the market judges information about the company. So basically there's two things that make a price of a stock move, and that's information, like the fundamentals of a company, and the psychology. Both of these factors are extremely important to understanding support and resistance. So let's take a look at one stock that I traded that I think will provide a good example. This was a long time ago. Let me just change my let's go back 5 years. The reason why I'm using this stock, because it kind of gives a good picture. So this is CAR. It's Avis Budget Group, rental cars, I believe. So if we watch this in 2009, this was kind of the bottom of the market. We saw here that the market was traveling sideways here. We did have a large day here, but there was still some. Just draw a line here. We could call that a break. This is this is more of a resistance we're going to talk about. We'll talk about support a little bit later, but so resistance here, right? It's traveling along here, and at this point something happened within the company. I don't know what happened, but it broke this resistance. Now, once it breaks this resistance, the market is telling you that there is something significantly different about the company. So let me just so basically at this point, let's just take it right before this break. So based on all the fundamentals and all the information and the psychology of the market at the time, this is what, just over, let's say, $1.12. $1.12 was all that the market was willing to pay for this stock. On April the 16th, 2009, something changed within the company that they were willing to push that stock from $1.18 up to $1.46 on increased volume. So if we look at what happened, it continued on, it continued on. Now let's look at support. You can look at support here. The more times it touches support, the stronger it is. So it broke support on this day. Now we're doing this all in hindsight, so of course it's much easier. But if you follow this trend line and it's bouncing, and on this day it broke, you could sell on this day. That's a decent return from $1.47 to just almost $5. That's quite a return in, how long was that? Maybe 3 months. Then we can work resistance back in. So now we look at this. We can use this sort of resistance and say, okay, at this point right here, even here, you could put it down here. You could say, okay, so at $5.21, this is the most at this time that the market was willing to pay. And then it broke out on higher volume. So once again, it continues upwards. And we can use our support. I mean, it's quite simple. There's a lot of fancy stuff out there, with all these different systems and everything, but support and resistance has worked throughout history and will continue to work. There's just nothing you can do to change it. That's just the market structure. So I mean, we could use this. Here it's getting quite steep, the trend line. So I mean, we could sell it here. We could sell it here once it broke. And I mean, it touched the support line, 5 or 6 times before it finally broke down. This was sort of a fake out, but we can use, once again, use resistance here or use it up here. If it breaks out of here, you can draw support and resistance line either horizontally or diagonally. So once again here, it broke out. This one was a little bit more suspect because the volume was not there to back up the breakout, but you could have done that and possibly moved, and you would have eventually been stopped out here. So basically that's it with support and resistance. I mean, we can use that on any stock, on any time frame. You can use this on Apple. If you want to, if you were thinking that Apple was getting too overbought here, what's to say that you couldn't short Apple when it broke this very steep trend line? Okay, so if you use, let's say, risk and reward lines, let me just draw the lines here. So let's say you sold it on this day, right here, on this day when it broke the trend line, and then you said, okay, I'm gonna cover the stock once it goes through its high. Well, you're still, you're basically break even, but this is a long-term short. Could have done that. That's what sort of makes a market. Everybody has an opinion. So that's the basics of support and resistance. There's not much more you need to know about it. That's just the basics. And you can build strategies around that, and it's a very important part of market structure. So I hope that all helps, and have a good week trading. Thanks.